again, ladies and gentlemen and esteemed guests. It's a pleasure to be back on stage this morning, or just into the afternoon, I should say. I love the way my panel, you had to look up at your own photographs and you weren't quite sure which of you really were. Oh my goodness. So we're going to get underway with our next panel, and this is the future of payments. Have we reached peak payments innovation? And I'd like to see, I'm joined by Keith A. Grossman, President, Enterprise for MoonPay, Martin Muller, Board Member of DekaBank, Olubenga Agboola, Founder and CEO of Flutterwave, and last but not least on the end, we have Kareem Atiye, CTO and co-founder of Ramp. So Keith, I'm going to get straight down to business with you. Let's talk about where we are right now and the payment technology that exists.
Sure. So, it's such a large question. Where do you want me to start on such a large question? I would say for many, many years, you saw a very analog payment system, right? And we're at this moment where you're beginning to see the technologies emerge where the intermediaries can be removed. It's not evenly distributed between who's doing it, what's regulated, and mass consumption today. And so for any person who's ever used sort of decentralized protocol to make payments, you see it's like very fast, it's seamless, it happens 24 hours a day, 7 days a week, at a fraction of the price. But there's a disjointedness between what that experience is and what the experience is for the regular consumer. And so I think that that's where we are today in aggregate.
Do you want to just fill us in a little bit, actually, about you and your role and what your company do? Because we're each actually from very different backgrounds here on this panel.
Sure. So I think I might have the weirdest background because I've been at MoonPay now for 4.5 months. Previously, I was the president of Time and Time Magazine, and I took Time into Web3. Prior to that, I was at Bloomberg. And that's when I fell in love with this region, was at Bloomberg Media, where we started to expand rapidly in Dubai and in the UAE. For me, my role is, MoonPay is a payments infrastructure and Web3 infrastructure organization. And my goal is to ultimately make MoonPay an invisible sort of resource to enable payments and access into the crypto technology ecosystem.
Thank you. Martin, you're coming again from a very different background. You've got lots of hats that you wear actually in your role.
Well, not only coming from Europe, but my name is Martin Muller. I'm a board member of DekaBank, which is the 4th largest asset manager in Germany and a large wholesale bank. And probably I'm a little bit of the alien here, being 34 years in banking, and despite the white hair, I'm a blockchain enthusiast. And we have been dealing with this for the last 5 years, and maybe for some of you also sort of deliberately using sort of reverse mentoring as a means to get into this. What do I mean by that? Well, the average people that advise me are 25 to 30 years old, and thereby I was having a steep learning curve, and I think that nurtured a process whereby we could really reinvent parts of our capital markets business, our custodian business, and the general idea how we think about it. And amongst other things, we are one of the first German bank who's actually entered the metaverse. We call it the Dekaverse because it's Deka. And I think Web3 offers an awful lot of opportunities. Obviously, I think it's hard to really have a definition, because when we talk about crypto, you have a different understanding than myself, probably in various others. So sometimes, and the same applies to Web 3.0, and the same applies with payments. So I think sometimes we have to do our homework first and say, okay, what do we would define as payment systems? What do we really care about? Or, for example, crypto has a very different connotation to a lot of my people at my age. They always think about crypto is Bitcoin. I'm not going to make an argument for or against Bitcoin. I'm just trying to say I'd rather talk about DLT technology, how that is revolutionizing markets, helping infrastructure to become better, and changing and disrupting supply chains. So maybe that just as an introduction, and later more, please.
Fantastic, thank you. Olubenga, GB, tell us a bit about yourself and the work you do.
Right. So my name is GB, founder and CEO of Flutterwave. We help companies and consumers in emerging markets in Africa to get paid and pay across the continent. We've been around for the past 7 years, helping clients like Uber, global companies, and local African corporates to pay and get paid in emerging markets. When it comes to the question you asked, right? For us in Africa, payment is highly fragmented. It's the bane of our existence in Africa. Every country has, its own payment system that works really well, but obviously across the continent, it's not scalable. What we've done at Flutterwave is basically to build a single unified infrastructure that makes payments simple for the average consumer or the average business on the continent. Thank you.
Thank you. Karim?
Yeah, sure. So I'm originally from Beirut, Lebanon, so it's nice to be back in the region. Now based in the US, where I founded a couple of years ago my second company, Ramp, which is focused on helping businesses save time and money by essentially providing a corporate card solution, spend management solutions, accounting automations, procurement, and all sorts of software services that really simplify everything that happens before and after payments. So most of the innovation we've actually decided to focus on has been a lot less on the way things get paid and whether it goes through the traditional rails or the Web3 rails, but a lot more around like all the workflows that happen before or after you make a payment to help companies spend less, more efficiently, faster, and yeah, it's been a lot of fun.
Karim, you talked there a little bit about, your role is to help businesses save money and time. What are the practicalities of that?
Of course. So, I mean, I don't know how many of you out here like operate businesses or have started a company, but like a lot of businesses as they scale end up becoming slower, less efficient. Many of them can't even tell how much they've spent over the past month and on what they've spent it. So really like the very first step is understanding like what you're spending on and whether this merchant that you pay via cash is the same that you've paid via check and that you're paying via card, and there might be like 3 people in your organization paying for the same software or duplicate pieces of software. And a lot of what we're initially focused on is like, let's understand what's happening with your business. Let's make sure it's all cleaned up, well organized. And over time, we've gotten into some more interesting aspects of savings, which is like negotiating on your behalf with companies, like helping automate the procurement process, looking at all the contracts that are signed across all our customers and trying to find essentially opportunities for like optimizing your contract and like parts of the contract that can be negotiated. And a lot of that has been very valuable, especially over the past years. Over the past year, as a lot of tech companies have, in some cases, shrunk, had to do layoffs, and had to refocus in the US in particular on really the bottom line and profitability.
We joked yesterday, actually, that 50%, I believe, of payments in the US is still done by check.
Yeah, it's
hard to believe in this day and age,
incredible.
eh? Keith's got something to add on to that.
So going back to my previous life when I was in media, I mean, I was always shocked at how many people still subscribed to Time Magazine paying check, right? So you joke about the 50% number. It's very, very real.
How do we make, we talk there, Karim, about just making it work a bit better, but how do we make the technology faster and more secure?
I mean, it's a broad question. I mean, really, I don't think, I think technology should be invisible. Like, it's really a tool. Like, at the end of the day, businesses want to grow, spend, deliver a service, a product. They don't really care what payments rail they're using. Like, they're indifferent. They don't care whether they're using a check or not. They do care about doing it as fast as possible and wasting as little time and money as possible. They want to have more money in their account and grow faster. So really the trick is to make it as invisible as possible, which I know there's been a lot of talk about Web3 on the different panels, but I think there's actually like a massive opportunity with the advent of some of the newer like large language models and the innovation we're seeing in AI to actually make a lot of the decisions that businesses do around like what to pay and how much to pay automated. Like, you shouldn't have to spend a month negotiating a contract with a vendor. Like, ideally an AI is doing that for you. You shouldn't have to spend like weeks chasing after receipts or deciding how to code things in your accounting system, an AI should do that for you. Like, the rules are pretty clear. So I think there's a lot to be done around, making it invisible and make decisions, making the technology take decisions on your behalf so that you can actually focus on running your business or spending more time with your kids.
Yeah. Martin, you're at a very different stage, I guess, in terms of the process and implementation. You know, you have legislation in place, but the payment leg is still missing, I believe.
Yeah.
You know, what do you do till you get there?
Well, you have to be innovative. I guess maybe just to put you into the picture, I mean, Michael has just mentioned it. In Europe, we have now MiCA. We have a sort of clear set of rules. We have a DLT pilot regime, which means this is basically a European Commission-run sandbox. And I have to say, I really bless them for that, because it gives us, as the financial community, the opportunity to literally try out the new technologies and how they work. Because actually, DLT, that's my opinion, will revolutionize the custodian business and the way securities business, including the payment system and the payment, is going to be done. And when you look at it in the regime, for example, we can sort of natively issue, trade, and settle digital securities. And that's what I would like to talk about. Digital assets for me are just dematerialized bonds, equities, and funds. Obviously, there are others, but this is really sort of at the core of the securities and the banking business. And we've done 500 million in transaction. We have created a company, a small fintech with 3 others, which is called Swire. Well, you all know SWIFT, and few people know what SWIFT actually stands for. It's Secure Worldwide Interbank Financial Telecommunication. So it was basically the backbone of the banking and the corresponding and the transfer of cash in all legislations. That's why we come up with Swire, which is Secure Worldwide Interbank Asset Transfer, because that's what we think is the next stage of development, that we have a seamless transfer and issuing and trading and settlement of digital securities all over the place. Now, what we have to deal with is that most regimes are highly fragmented, whether it's the European Union or when you talk about Africa, you talk about 54 different systems. Well, we have a so-called unified Europe, but if you go to the nitty-gritties, well, they are far beyond unification. So to overcome that, you have to think about, well, is there a chance that all the banks would voluntarily work together? Well, I think it's probably x to the power of minus 10 likely that that will happen. So we thought, well, why not set up a non-competitive software company, which is providing the backbone, i.e. on the infrastructure level, on which, since it's open for others, then anyone who has a DApp can actually come to and say, yeah, fine, if that works, will benefit the system. And if not, well, then it will just simply die. And this openness, I mean, we call it co-opetition. That's what we are like to invite others to. Let's cooperate on the infrastructure level, but keep our customer interface by ourselves and really fight for the customer separately. And obviously, having regulation in place, we are missing the payment leg. Yeah, we can settle electronically issued securities now, which are in a form of a public registry issued, but we cannot have in a single ledger the payment. So if we do DVP or DVP, we're missing this leg. How do we do this transaction currently? Well, it's called PP, per PAW. You know, people physically still have, calling and saying, get the transaction. So on that basis, we come up with a solution which is called Cycross.
Yeah.
And Cycross stands for a non-invasive trigger solution, which would actually combine the best of both worlds. Since we have SWIFT, and SWIFT has just gone to a new ISO standard, which is called 20022, they actually provide digital crypto information on payments. Simply said, I'm a crediting and I'm a debiting bank. I will simply get, as in the old days, I get the information whether the cash is there. So we think it's the best bridging technology to simply take that information, put it into a smart contract, into a digital asset, and thus be able to leverage on the existing system. That's why we call Cycros a non-invasive trigger solution. Trigger solutions are probably very prominent, but I think it's helpful because 11,000 banks in the world use SWIFT. So let's take that as a start, and we'd be happy to share the white paper and actually see how you could deal with this in order to then develop onto this later on, because yes, CBDC is the name of the game, but maybe we can talk about that in a little while. Thank you.
Save some for later. Don't give all the good stuff away at the beginning of the chat. I want to bring in GB now. We haven't heard from you much, but how important is it to identify the right markets that are ripe for innovation?
So when you mention innovation in emerging markets, it's really up to going to the basics in Africa, for example. How do we enable somebody who sits in London, who is sending money home to family in Accra or in Lagos, send it faster and quicker using technology? That's innovation for them. How do you create cost savings that makes that payment quicker and easier to do without much friction? That's innovation. So innovation in my world is really enabling a small business in Africa to increase their addressable market size just because they've got a payment system that works for the entire world now through one simple integration or even without any integration. That's innovation, right? So in our world, right, it's really about how do you enable a global business to scale their market size by enabling Africa via one click, right? And those innovations are actually affecting the everyday life of the average African consumer or small business as they grow and scale their business. During the pandemic, for example, we launched something called the Flutterwave Store, which helped small businesses in Africa to be able to put their stuff online to sell. When there was lockdown in 2020, a lot of these companies, these small businesses actually, were able to put their wares online and they could sell to anyone, anywhere in the world. Down the line now, that has scaled to over 30,000 companies, SMBs, using that to sell online. Another example is technology-driven innovation on remittances on our Send product, which basically enables anyone, anywhere in the world to send money home to Africa 6 times faster than you would by any typical platform because we're embedding technology to aggregate innovation, to drive payment, and make it simple and quicker than it will be. So that's what innovation really is for us, driving value for the average person in our market.
Africa is a very fragmented landscape, and I believe over 54 countries, each with their own regulator. How are you going to ensure universal take-up and implementation? There are, of course, obvious digital divides that need addressing too, I imagine.
So, Africa has always been at the story of leapfrogging. We went from no phone to mobile phones, right? We skipped the landline revolution in Africa. So typically, with the population of Africa, with the average age 20 to 30 billion people continent, the opportunity is there and the scale is there. Now, it's up to people like Flutterwave or companies like, MTN, Airtel, who are building infrastructure to connect everything together to scale payments and infrastructure on the continent. And we're seeing it happening every day. Now you have MTN in over multiple countries in Africa and Airtel creating one telecom infrastructure. You have Flutterwave building one payment rail that covers multiple continents together. We do the dirty work. We go across all the countries, get licensed, get partnerships done, get regulated, get technology integrated, get the entire platform plugged in, and provide a simple interface to our customers, or to businesses, or to large corporate, global businesses, to be able to just do what they want to do for their own business in a very simple way. So I think the fragmentation is an opportunity, right? Which we are solving at Flutterwave, for example, to build just one simple platform and make it simple. We like to say Africa is not a country, but we like to make it feel like one, right? And the goal there is to make payments simple to allow that innovation to master and to scale.
Thank you. Did you have something to add into this one?
We couldn't agree more. Just use one simple platform. But the challenge is, how do you get all the people on board? That's the challenge.
Thank you. Martin was always almost touching on it earlier, Keith, and I'd like to bring you back in the conversation here. When we talk about central bank digital currencies, what are your thoughts on the technical challenges and opportunities that they present?
Sure. So, you brought up an interesting point earlier, and I really appreciate what you just said a second ago. But the point about sort of Web3 technologies and sort of how confusing they can be in terms of definition. And my definition of Web3 is the complete reinvention of the internet, right? So whether it's crypto technologies, GPT technologies, or immersive technologies, the complete sort of recombination to reinvent sort of the ecosystem. As I started to watch, things get digitized, in media, I used to always say, if it can be digitized, it will. And now in sort of this space, as I look at it, I have a very strong view that if it can be tokenized, it will. And so I think it's just a natural evolution of where it's going to go. I think that we're going to find ourselves over the course of, 10, 15 years, maybe sooner, with tremendous amount of central banks being tokenized with stablecoins. But the challenge that we're going to find in between is going to be one of, regulation and also, people being disjointed. So one of the things with tokenization that is incredible is it removes the intermediary. It replaces, trust with truth, right? And that's kind of a fascinating sort of a basis. The challenge with removing intermediaries is that it's not as simple as one would say, right? There's so many sort of inefficiencies. Like I always like to joke that business would be very easy if people weren't in it, because then you could just play an efficiency game. And so when you step back and you look at sort of evolutions in Web3 or evolutions specifically as it relates to the payment infrastructure, I firmly believe that it's going to be one of those evolutions that starts in the cultural sphere, right? Very similar to how, like this device, when the iPhone came out, everyone was like, this is not a business device, right? It doesn't have a keyboard. It's going to start with the consumer, and then consumers are going to slowly get very comfortable with it, and then all of a sudden you're going to find businesses and governments are going to sort of move and adjust to meet the situation. But as it relates to governments and stablecoins, I mean, it's just a more efficient way in which they'll be able to operate.
Karim, your thoughts on that?
Digital currencies?
Yeah.
To be honest with you, don't fully get them. Like, I feel like we, or at least in the US, like we have what seems to behave and operate like a digital currency. Like when a business makes a transaction, like no one's carrying gold or cash or anything from a bank to another. It's seamlessly happening in the background. Now, beyond that, I also like just putting my capitalist hat on. I mean, we're all like working on private companies. I'm guessing like there are a lot of private companies in the audience as well. It's like at the end of the day, like the key thing you're trying to solve is just like build something people want, right? Like consumers, businesses. And I don't know of many consumers or businesses saying like, I would love a central bank digital currency. Now, in that case, it might be, it seems like more driven by maybe regulation or the need of countries wanting to like collaborate more closely or work more with each other. In which case, like I may understand the need, but like it's just not. I just don't feel like it's something that's going to attract the most ambitious engineers, designers, and product people. And like that's generally the world that I'm most familiar with, frankly.
Martin, you talked earlier about Cycros and, am I pronouncing this correct, Swiat? Swiat. Why didn't you just wait for CBDC to become real?
Well, there's a couple of reasons. Unfortunately, there is the ECB in Europe who thinks that the retail CBDC is worthwhile to pursue, and actually they want to go about it. I have my own opinion on this, and maybe just as a side note, you really have to wonder whether they have the political legitimate sort of legitimization to do this, because actually I think it goes far and beyond. And honestly, I don't see 3,000 euros as sort of digital euro to be helpful in the whole scheme of life. However, on the wholesale business, and if you think about the trillions that are sort of going around the world every single day, wholesale CBDC would be a very, very cumbersome solution to really get digitalization in the securities market going. Because what we are doing here, I mean, we have a highly fragmented scheme. We still wait 2 days for US treasuries to arrive in Europe or in Germany. I mean, this is inconceivable. And I mean, you said it is seamless. Well, if you look behind the scenes, this is far beyond from seamless. I'm not saying that we use faxes, but I mean, fails is something which is quite normal in the current systems. You know, securities fail produce an awful lot of hassle in the whole system. If you have a DLT system, there is, as you mentioned, just a single point of truth, and it's either correct or not, or the transaction doesn't help, it doesn't actually become into being. And that's why I'm saying the Deutsche Bundesbank has done a trigger solution which works. Others have done this as well, and there are a lot of initiatives who all prove it is possible. And whilst I do not see, for example, the US going to a digital euro, because they say we are number one, but still, for example, would you want to be dependent on a single stable coin issued by one of the largest banks in the world? Probably not. Not that we distrust them, but who wants to be dependent on one single? And that's why I think CBDC or a form where we could use and really sort of smooth the wholesale business would be helpful. And since I don't see that coming in the next 10 years, that's why we think let's have a bridging solution which we can actually implement using what we have, and rather than sort of extrapolating all the fragmented issues that everybody is working on.
Well, we've talked, as you say, tokenization earlier, Keith, you were talking about, and currencies. And I want to move the conversation on to cryptocurrency. You know, how likely are we to see crypto becoming a flat currency that is an accepted medium of exchange? And Keith, you're smiling, which makes me think you have an answer for this one.
No, I mean, look, I think theoretically I would love to see it. Like realistically, I don't think I'm going to see it in my lifetime. But you know, one of the things that I think is important to recognize is, you know, there's roughly 200 countries in the world, and you know, not all of them are incredibly stable, right? And so in the countries that are not stable, I think, you know, you see that cryptocurrency provides a really good means of exchange for people to do everyday life. And, you know, in countries that have good regulation, you know, I wouldn't be surprised if you saw that you could make transactions, but do I think that it replaces, you know, government systems? Not anytime soon.
Karim?
I don't think it's unlikely. I mean, there are countries where, I mean, just being from Lebanon, I know there's a fair bit of like people transacting directly in cryptocurrencies because they either can't take their money out of the bank or, or just don't trust the banking system anymore. And like you see a lot of places where it's the case. Like I think it's very likely that a cryptocurrency in which like people transact without like off ramping, it will happen in some parts of different countries. But at the same time, I still think it's more likely, and for all the talk there is about like the US dollar not becoming or not remaining the reserve currency of the world, like if anything, it feels like it's increasing as a reserve currency with all the conflicts happening in the world and benefiting from some of the same things that cryptocurrencies are benefiting from, like a lot of people that are escaping conflict and war zone or, yeah, in some cases, like getting into, on-ramping onto crypto and buying cryptocurrencies, but in many cases also going back to the US dollar. So it's hard to say. I tend to agree with Keith that like if it does happen, it probably will take a while. I don't see an immediate catalyst.
Thank you. GB, the work that you're doing as well is helping to connect countries and regions in a way that hasn't been done before. You know, how does that interact with the global economy, the stuff that you're doing?
So we know for a fact that Africa does not exist in isolation. Africa needs to plug into the world. When it comes to global trade, you see a lot of trade between Africa and the US, Europe, Middle East, and as well as China. What we have to do for companies like Flutterwave is obviously to build the infrastructure to connect the continent to all these markets, right? And payments needs to be quick and fast, right? The average business owner in Africa who is selling to a consumer in the US wants that consumer to pay them with a local payment type that they are used to in their market, right? And then they get that money as well to get their goods fulfilled in the right time and the right way. So, taking that in mind, what we have to do for payments in connecting borders and continents together is to ensure we connect Africa to the US, Africa to Europe, Africa to China, Africa to the Middle East. And the goal there really is wherever the customers of any business exist, that payment should be as simple and local as it can be, right? So that is the major goal that we have, that we're still doing, right? Right now, most payment infra companies in Africa are building that rail, connecting those markets together to enable those trades to blossom and grow and for scale.
What's been the biggest challenge creating the ecosystem that you've made?
The biggest one is the cultural differences and nuances that exist between both markets. There are payment types that are seen as fraudulent in the US, but are not in Africa, right? There are sectors that are different to understand, and doesn't mean they are different. It's just cultural nuances just exist, right? So I think a big barrier is, education, letting people understand how payments work, knowing that you can't just plug and play a rule from a market or another market without translating those rules to the nuances of the culture you are planting them in. Those are the biggest challenges so far. But I think the world is obviously a global village. That can change. And connecting those borders together obviously creates more value at the end of the day than anything else.
Thank you. I think Martin or Keith, one of you mentioned regulation earlier. What regulation still needs to be put in place, and how do we tackle that and make sure that it is universal?
I mean, I'll give a short answer, Martin. I'll let you
Give the
go
long one.
deeper. In the United States, right, compared to, let's say, the UAE, there's not a lot of clarity right now. And that's all we need is clarity, right? I think that a lot of people, and Brad over at Ripple said this yesterday, and I thought I agree with it, a lot of people want to work within the rules. And the challenge is we just don't know what the rules are in the United States. And it seems to be sort of sliding goalposts, whereas you come here and, there's a lot of clarity. There's a lot of sort of structure. You're beginning to see that in Europe. There's clarity and structure. And it just feels like, at least within the United States right now, as it relates to regulation, I don't mind if it is a little bit over-regulated, but at least give some clarity as to where we have to go, so that way we could at least start to move in the proper direction forward.
Martin.
I couldn't agree more. I mean, we actually see a couple of US institutions now coming to Europe saying, okay, at least here we can issue and see how it works, because we have a framework. Although I wouldn't overestimate that we don't have a fully implemented regulational framework, but one which has it, for example, Switzerland, a very small market. Obviously, it's easier, and my point is, if I compared it with the UAE, I mean, it's the deliberate attempt to have a regulated sandbox which can grow. And as such, this is maybe the DLT pilot regime helps to do this. Other pilot regimes, I think, would be helpful. Obviously, if they were to counter the same issues, it would be even more helpful to give us as market participants a basis on which we can actually then work. Personally, I think, for example, in Germany or in Europe, we have 20,000 billion of securities issued. I think the tipping point for digital securities to be issued is probably going to be in 3 or 4 years. And after that, it takes it all. Then we will only see the digital issuance of securities. But up to that point, unless you have a clear regulation, people will not take the effort and do it. So strong wish to regulators would be, to team up and hopefully come up with a more consensus-oriented approach for how that should be regulated. Last comment on the cryptocurrency side, though, I simply refuse to look at it as a currency. It is a new asset class, absolutely, and it can be used to exchange. I would never really talk about it as a currency, and so much for my personal opinion, how likely it is I have a shorter life to live, so in my life it will probably not come.
Oh, gosh. Kareem, down on the end there, I haven't forgot about you. How important do you think it is still for innovation in the payments space? When people are facing economic struggles globally and a potential recession looming, what impact does that have?
Yeah, I mean, it's like going back to when we even started our company. I mean, part of the things that baffled us at the time is it seems like every single credit card company or card company out there was generally pushing points and rewards, and especially in the U.S., it's like spend, earn things. And you talk to consumers, you talk to businesses, and you ask them what they're most worried about, and it's generally about like making payroll, having enough money in their account, and being able to weather times of stress and potential recessions. So there's absolutely a need to like refocus some of the innovation around incentivizing people to save, to prepare for stresses, to really understand like how much they're spending, what they're spending on, how they can minimize it, how they can negotiate it. So yeah, absolutely. Like if you looked at some of the a lot of the payment innovation that has garnered a lot of attention over the past couple of years, it's been around like a lot of it has been around BNPL, and in some cases like pushing people to buy things that they shouldn't be buying or can't afford. And I think over the next couple of years, we're going to see more innovation on probably the other side of helping people budget better, spend more wisely, and save more. So it'll be interesting to see.
GB, what's the state of affairs, I guess, on the continent where you're working in terms of those factors and where they play into the innovation space?
I think it's similar to what we just said. On our side, it's really just continue the work of building the infrastructure. The defragmentation of payments in Africa is still a thing that we're on, and we're not there yet. So the goal is to accelerate more effort in getting that done, and also a lot more market penetration, helping people to get more financially included, to be able to be part of the landscape, expanding the time for businesses across the continent to be able to pay and get paid, and obviously just deepening infrastructure that makes payments really simple on the continent.
Thank you. So I'm going to ask you all this final question, the million-dollar question. If you, had a crystal ball, where are we in 5 years from now, Keith, in terms of the innovation and payments space?
Look, I'm not a fan of 5-year predictions, and in the technology and innovation space, 5 years is
2 years?
too far.
Should we start at 2 years then?
2 years? I mean, 2 years, I think it's going to be roughly the same. I think, not to give a boring answer, but look, I think that along the trajectory of if it can be digitized, it will, and then if it can be digitized, it will ultimately be tokenized, right? And I think that the question is like how much gets tokenized and what type of content gets tokenized. And really, when you look at it, it divides, and I think you're going to see a lot of change when it comes to consumer stuff over the next 2-3 years. Memberships, subscriptions, loyalties, reward programs will all change a little bit. People won't refer to that stuff as Web3. They'll just say, this is a better experience. But then in the invisible stuff, which is where payments exists, it's really an exercise in efficiency. And, I think that there's a lot of barriers before those sort of hurdles are overcome holistically. And I think 2 years might be too short.
Martin?
I basically agree with him. 5 years is a long time. Everything will be tokenized. There's no limit. The processes behind for payments will lag, and they will sort of take more time to be harmonized because there are too many intrinsic stakes involved. So that's probably most likely.
GB?
I think there will be a cross-pollination of payment ecosystem all over the world. You will see a lot more global companies operating in Africa because we will have helped them to make that payment simple on the continent. You will see the reverse happening as well, where a lot of our companies in emerging markets operating globally because payment is so simple, and that becomes easy for it to happen.
Thank you, Karim.
I'm trying to think about something outside of payments and fintech. Probably my strongest prediction there is that we'll be spending a lot more time interacting with AI agents than with people, which is a little scary to some respect, whether it's content we're interacting with or the way we're doing work, or it's going to happen fast.
Gentlemen, thank you so much for taking time out and talking to us this afternoon. Ladies and gentlemen, please put your hands together for our fantastic panel.